Someone said the same. Let's confirm now, guys. Can you guys hear me now? If you can hear me, let me know. Just play the feedback. Let's see. Okay. I think the sound is all right, guys. I think it's good now. I think everything's working fine. Let me know if you guys can hear me clearly. We're just gonna fix this in 1 minute, and everything will be fine, guys. But let me know now if you can hear me. All right, guys. I think it's now. I think everything's working fine. Let me know if you guys can hear me clearly. I'm just gonna fix this in 1 minute, and everything will be fine, guys. But let me know now if you can hear me. Should be good. Should be good. I just played the feedback now and I can hear myself very well. Okay, you guys can hear me. Perfect, perfect, perfect. Welcome back to another amazing live session. Guys, you guys know I always love, these sessions, the energy you guys bring, the honesty, the experience, the way everyone just learns and shares in the comments. It's amazing. Welcome back to another session. Now, today's session is going to hit deep because we're not just going to do, practical analysis. We would also analyze the markets, look at some of the charts, some of the important pairs and what's going on with the markets today. But before I get into the important details of today's session, let me know in the comments your name and where you're watching me from. Let me know in the comments your name and where you're watching me from, or where you're joining this session from. You can also let me know if this is your first time, taking part in an Octa live session. You can also let me know if this is your first time taking part in an Octa live session. And while you do that, I'm just going to run through the quick disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general markets commentary and does not constitute investment advice. Okay, while you guys tell me your name and where you're watching me from, and if it's your first time, I'm also going to go ahead and talk a bit about myself. Just give you guys, for those of you that don't know me, a brief intro to who I am and my experience as well. Just gonna turn this. All right, my name is Ambrose Ebuka. I have 6 years of experience in the markets. I trade with precision and I combine swing and scalp setups to stay informed in the financial markets. Now, for those of you that don't know what swing and scalp trading is, in the course of this live session, I'll get to explain to you guys what that means and how you can fit that into your own trading style, because a lot of you guys trade and not even know if you're a swing trader or if you're a day trader or a scalper, or you just wake up and you just start trading. So I'm going to explain that to you guys in the course of today's session. And most of the currencies, or the most of the currencies or commodities that I trade would be GBP, JPY, GBP, USD, and the commodity gold. I mostly trade gold actually, and I hit a 95% accuracy, and I backtest these pairs to stay razor sharp. I'm going to look at the comments right now and see the people that we have on today's session. Ricardo from South Africa is the first time. Welcome, Ricardo. Silva from Malaysia. Welcome everybody. Now we're going to basically, this is how this session is going to go. We're going to look at the economic calendar. For those of you that do not look at the economic calendar, I'm going to explain to you guys why it's important to do that. We're also going to I'll introduce you guys to my strategy, which is the zone trading strategy that I use, that I've always been using, even in previous sessions, to analyze the markets. We're going to do a dollar index review. I'll still explain what the dollar index is for you guys. We're going to also talk about how you can recover, which is also important for especially those of you that just started trading like 6 months ago, 1 year ago, and you're probably still trying to find an edge, and you have this experience of blowing accounts. I'll show you guys how to basically recover from that. And we'll have a Q&A session where I get to ask you guys questions and also take your own questions. Most importantly, take your questions in the Q&A session. Katani from Gambia, welcome to the session. Guys, if you're ready for today's session, go ahead and type "I'm ready" in the chat and we're going to get started. Now, this session is going to last for about 45 minutes, so use the YouTube live chat, as I can see you guys already use, to ask your questions, and I'll periodically check it to answer all your questions. Again, welcome to today's session. Now, before we get started though, let's have a little conversation, right? If you've experienced blowing an account, let me know in the chat. If you've experienced like trading and then you blew your accounts, let me know in the chat. And if you look inward, you can ask yourself the question, what did it teach you about, yourself or your trading? If you've experienced, blowing an account, let me know in the chat. It's also good to kind of identify these mistakes, because when you identify them, then you can now overcome them. Okay. Drawdowns are integral in trading, right? But what is not normal is kind of like risking 100% every single time. All right, especially as a beginner trader. Again, guys, it's going to be an amazing live session, but it's not just going to be about practical and charts. It's also going to be about connecting and realizing that no matter whatever stage you're in, there is always a way out, and you're not alone in this journey. Okay, so let me know in the chat if you experienced blowing an account, and by the end of this session, I believe that you would all know how to reset mentally after drawdowns, how to rebuild your system step by step, and how to get back on the charts with clarity and confidence and not fear. So if you're ready, I already see the comments. Someone said more than 6 times. Well, it's a good thing that you're able to also identify how many times it has been. So it's important that you make the 6th one the last one. All right, guys, let's get into today's session. We're going to start with the economic calendar. Right now, before you start trading, you need to know what's happening in the world, and that's what the economic calendar is for. It's like a map that shows you when important events will happen, these events that can move the markets. If you've been trading and you see the market just suddenly shoot up or shoot down without any warning, that's mostly because there's something on the calendar, maybe a new inflation data, maybe a job report, or a speech, just like we had earlier today from a central bank leader or governor. These moments are when traders make decisions and the markets would react fast. Now, today, if you look at the economic calendar, you see that we only had one event, and it's high impact, and it's only one here because my filter is set to only high impact. If you're new to the economic calendar, you want to add the medium and the low impact event, and you want to click on apply filters, and then you'd see the other events that we had today. But like the name goes, the low impact would bring about low volatility, medium volatility, high impact would bring about potential high volatility to the markets. It's just for you to be aware of these events and the impacts that they would have in the markets. But today, the calendar had only one big event, which is the Federal Reserve's chair, which is Jerome Powell, his speech. There are no inflation reports today, no job data, nothing, just a speech. And when he's talking, when this guy is talking, the whole market listens. Now, before I even go ahead to explain to you guys who he is, let's talk about what the Fed actually is. When you see Fed, Federal Reserve, what is it? Right? You can see it in articles, in videos. You can see Federal Reserve, you can see Fed for short. But what is it exactly? Now, the Fed is the main bank of the United States. It's like the central bank of the United States, and it controls how money flows in the economy. So when the Fed wants to slow down inflation, they can increase the interest rates. And what that means is borrowing money will become expensive, people would spend less. But if the economy is weak, then the Fed might lower the interest rates because money now becomes cheaper and businesses will be able to grow again. Every decision that the Fed makes, the Federal Reserve, every decision that they make changes how the US dollar behaves. If they increase the rates, the US dollar, usually gets stronger because a lot of people see that rate as, interesting to invest in, and the dollar gets a bit stronger. If they reduce the rates, the dollar can fall, and that's when gold stocks starts to go up. Okay, so who is Jeremy Powell? I'll just give you guys an introduction to what the Fed is. So who is he, and why is he important? Now, he is the chairman of the Federal Reserve, basically a very powerful voice in finance in the whole world. He's not basically a trader, but his words can make them move, right? Now, when Jeremy Powell speaks as the chairman of the Federal Reserve, the markets would react immediately. And that's why most traders, most investors pay attention to this speech. One line of word from him can move billions of dollars. So it's very important that you pay attention. You can always watch this from the official website of the Federal Reserve. As you can see, Octa already tagged the link to this calendar. So when you come on this calendar, you just come down to his name, you click here, and then this takes you to the bio, but you can just click on the main page of the website and you can always watch, the events, his speech. Investors, traders, they always want clues from his speeches. Would they cut the interest rates? Would inflation be a problem? So what was the conclusion of today's speech? Now, today was a bit calm. There was no particular comment. He didn't make any particular comment on the interest rates. His focus wasn't on inflation or the interest rate. He talked more about, how these small banks can support local economies, how the Fed wants them to stay stable. There was no really important, would I say, comments made concerning inflation or the interest rates today. And when something like this happens, when you watch the Fed Jerome Powell speech and you're not able to get any particular tone, maybe dovish or hawkish tone, what do? You look at what happened before. Like yesterday, we had the FOMC, right, with the minutes. For you to be able to understand what silence, because basically today we didn't get any information on the interest rates or inflation, so basically called out silence. And for you to be able to understand what that means or why it matters, you have to look at what happened yesterday, which is the FOMC minutes, right? And what these minutes showed us was that most members of the Federal Reserve believe that inflation is no longer a big threat. Okay, so even if the chairman of the Federal Reserve didn't exactly say those words today, this message is already clear from yesterday that the Federal Reserve is slowly moving from, fighting inflation to protecting growth. And when that happens, what do traders do? What do investors do? They start to think about, they start to think differently about where to put their money. Remember, when they increase the interest rates, the currency looks enticing, looks interesting, and people would want to invest. They increase the interest rates to fight inflation. If they're slowly moving from fighting inflation, obviously we'll be expecting rate cuts. And it's really important that you guys understand this aspect of trading, because as traders, right, when you get into this journey, when you embark on the journey of financial trading in the forex market, you're instantly drawn to the charts, to the technical aspects: buy, sell, make a profit, strategy, indicators. But you need to understand what actually moves these markets, and that's where the fundamentals come in. It's not the only thing that moves the market or the only driver of the market, but it's a major driver of the financial markets. Let me know in the chat if you guys understood the analysis of today's speech. Let me know in the chat if you understood the analysis. Let me know in the chat if you understood the analysis. We're going to go straight into the chart right now. And while I look at this pairs, which is the dollar index, I'm going to explain to you guys what it means. I would also like for you guys to comment your favorite pairs that you would want me to analyze in the market. So while you watch and learn, you can also go ahead and comment, your favorite pairs that you'd want me to analyze today. So if you're wondering what the dollar index is, it's basically a scoreboard, right, for the dollar. DXY. This dollar index, what it basically does is it kind of tracks the value of the dollar against 6 major foreign currencies. What are those 6 currencies? We have the euro, the Japanese yen, the British pound, the Canadian dollar, the Swiss franc, and the Swedish krona. Now, what DXY does is it tells you how the dollar is performing compared to the euro, the GBP, the pound, the Canadian dollar, the Swedish krona, the Swiss franc, the Japanese yen. And if you look at this chart right now, you'd see that for a while now, the dollar hasn't been performing well. I would say from the start of this year, right? Because I could take this all the way back to January. From the start of this year, the dollar hasn't been performing well compared to all these other currencies that I mentioned, these 6 currencies that I mentioned. Now, if you go to these currencies, you see most of them trended to the top, right? Why? Because you can see the dollar lost its value this year for the greater part of this year, because from January up until now, the dollar has been trending downwards, and you can see GBP had a move to the top side. If you check euro as well, euro for this year also had a move to the top side, right? If you check gold did amazingly well, but not just because of the dollar, but also global factors and tensions, global uncertainty, tensions. I always explain to you guys how gold is a highly safe haven demand commodity, right? Now, just by basically understanding what the dollar index is, you're able to apply this knowledge to 3 pairs I just mentioned: GBP, euro, and gold. Just by understanding that, the dollar has been trending downwards, it's been bearish. Now I can look for buy opportunities on GBP USD, on euro USD, and on gold right now. So that's basically what the dollar index is. But something interesting is going on with the dollar index right now. Now, in our previous analysis, I explained to you guys that the dollar index is trending downwards, and as long as we keep trending below this trend line and below this key level, the dollar is bearish. But now, this week, the dollar has pushed out of this trend line and is now trading at this key level. This push out of this trend line is very significant. Remember, guys, it's important to trade what you see and not what you think. Yes, the dollar is bearish, but what's going on with recent price action is that the bulls are beginning to gain momentum. This momentum has taken out the highs of all these previous candlesticks and has come back to test the previous bullish candlestick that was also a part of this key level. Very significant, because what does it tell you? It tells you that the bulls are beginning to gain some strength. And if we sustain that bullish momentum above this trend line, the dollar index is going to potentially break out of this resistance for another retest at this previous swing high. If the bullish momentum, I'm going to say that again, if the bullish momentum rallies above this trend line, if you see the dollar index rally above this trend line, we're going to see a struggle here that potentially takes us out of this key level to make a retest at the next one and this one right here. And when that happens, if you trade GBP USD, if you trade Euro USD, you'd have to start restructuring your buys, because now the dollar is beginning to gain momentum, it's beginning to gain bullish momentum, it's beginning to gain strength. It would not be ideal to still sell GBP, to still buy GBP USD if the dollar is beginning to gain strength. So I'm going to say it again. If the dollar index trades above this trend line that you just broke, I mean, we've seen it break above it. It would most likely, we only have tomorrow for the week to end. It will most likely close above the trend line. If we rally above this key level and bullish momentum sustains above it, then we're going to see the dollar index potentially make retest at this swing highs, and that would mean that the dollar would begin to gain some strength. What would that mean for GBP USD? What it means is GBP USD will potentially drop a little, maybe into this zone and into this ones as well. We have quite a huge layer of liquidity sitting all the way in these zones, and what you can do is you can probably take a screenshot right now and kind of, you know, pay attention to these key levels that I've mapped out for you guys. Every single line you see here is a key level. And what is a key level? A key level is basically a place where, you know, buying and selling pressure has been identified, right? And that brings me to the explanation of the zone trading that I use. Now, what is zone trading in general? Think of the market like a war ground, like a battlefield, you know, between the buyers and the sellers. Now, instead of trying to look at every single candlestick, you only focus on where the buy and the sell clash. And where do they clash? All these areas like this, up here, like this. I'm just going to take this off. Like this, you can see. Like this. You can see how most of these levels now turn out to become support levels. Most of these resistance levels, as you can see, previous resistance, the market broke above it, came back to find support. All these clashes are zones. They're not single points, they're zones. Okay, you can call them area of interest, territory of interest, point of interest, but it's important that it's identified. The grammar you use, the English you use doesn't really matter. What is important is that you're able to identify what is going on at that particular zone. All right, and when the market comes down, if the GBP USD market rallies to the downside, it would most likely respect these levels. You can already see it happen, pushing all the way down to respect this key level, which I believe would potentially happen. I see GBP USD coming all the way down to test these zones, but I'd have to go to the lower time frames for confirmations on that sell move. The dollar is beginning to gain some strength. for those of you that commented in the chat, I see a lot of you guys type gold and BTC as well. I'm going to look at that. But for now, if you're trading GBP USD, you'd have to, the market is basically cooling off at this point, you know, so we're still going to see more downside on GBP USD in days to come. Same thing for Euro USD as well, more downside. Again, most of these levels have already been mapped out, and you can see that on its way down, Euro USD tested, and if it's still going to come down here, you're still going to get a retest at this zone, which is very significant in the Euro USD market. You have liquidity sitting right here, very significant in the Euro USD market. So on the way down, we're still going to see Euro USD test this zone. Basically, if you trade GBP USD and Euro USD, all I'm trying to say here is that buy momentum is beginning to cool off. So it won't be really ideal to start hopping on buy trades right now. We want to see, you know, the markets drop, and for whatever reason, if you're going to hop on a buy trade right now, you have to see bullish momentum. Okay, but right now, we're just going to see the market drop down a little bit to our key levels, and then we react accordingly. Gold is doing amazing, guys. Even though at this moment we're seeing gold drop, which is obviously because, well, one of the reasons would be because gold is pretty overbought right now, and we're seeing, you know, the tensions going on in the Middle East begin to cool off. We're seeing the emergence of some peace deals, and obviously that would also bring about reduced hype on gold as well, strength on the dollar as well. Gold hit $4,050 per ounce, and guys, in our previous videos we already analyzed all these moves about gold's bullish momentum. I'm going to go to the daily time frame and the 4-hour time frame so we can get more information on the analysis. So on the daily time frame right now, for the most part of today, gold has been trending downwards. Again, pretty overbought. Obviously the market is going to have to cool off a little bit. It doesn't mean that gold is now bearish. We're still pretty much bullish as long as we're trading above this initial level of breakout. We're still bullish. Gold is still bullish, but we're just getting that, you know, push to the downside because we're overbought on gold right now. Again, guys, the bearish move is still temporary for now on gold. If you want to scalp some of that, you can, but at the end of the day, you have to be aware that you're going against a bullish market. Okay, this is not a confirmed bend on gold. What gold just did was to cool off from overbought levels back into the RSI and also make a retest at this key level. So if you have an existing understanding of zone trading and key levels, you would obviously understand and expect that gold on its way down would make a retest here. This is the zone, or the most recent zone, before the push to gold's all-time high. I'm going to extend this to this point right now, just because a few days ago I made a video on gold, you know, potentially breaking $4,000 per ounce as an all-time high. It did that. I've basically adjusted my all-time high like 5 times in the past week, and you know, gold has created another all-time high here, and it's obviously cooling off from that just because we're pretty overbought on gold, and you know, tensions in the Middle East are beginning to cool off a little just because there's some peace talks going on. But again, guys, that doesn't mean that gold is now bearish. That doesn't mean that if you want to enter sell trades on gold, then you want to hold it for a long time. You can scalp some trades on gold to the downside, potentially these levels here, or even this level. But anything below this level, if gold breaks below this level, then obviously you're looking at more correction to the downside. But as long as we're trading above this initial level that we mapped out before the breakout to $4,000 per ounce, gold is still bullish. Okay. So for those of you that trade gold and typed it in the chat, let me know if you guys understand the gold analysis. I'm gonna go to the 15 minutes to see. Let me know in the chat if you guys understood the gold analysis. So I just extended the ascending channel that gold has been respecting. If I extend this to the 4-hour time frame, you'd see how gold has been respecting this ascending channel, and obviously really nice pullback to the downside into our key level that also aligns with the swing low of our ascending channel. Well, someone is saying currently the gold was a terrible drop. So here's what I want you guys to understand with gold and just the general movements of the markets, right? First off, gold doesn't really move the way you expect other currencies to move. And it's, you know, it's faster to understand how gold moves when you combine fundamentals. So, for example, GBP obviously reacts by the influence of the Great Britain's economy, right? The dollar, the same thing, influence of the US economy. So you have to ask the questions. What does gold react to? Gold is not like tied to a particular country, right? So what does it react to? Why does it go up and why does it go down? If you say the US dollar goes down when US economy is bad, you know, when the interest rates are cut, that is tied to a particular country, right? But gold isn't. When you begin to understand that, then you look at gold differently and trade gold differently. Another thing I want you guys to also understand is for every move to the upside, it can be an impulsive move, it can be, you know, a rally to the top side. A correction is inbound. Like there's always a correction that's going to happen. So for example, when gold did 4,000, you know, like I said, I made a video about this anyway. When gold did $4,000 per ounce, obviously we are pretty overbought. Again, this is a psychological level for gold. It will be very not. I mean, you can't just expect gold to hit 4,000 and start to drop from there. The market will obviously push up a little bit. 4,100 is still in sight as well, but there's always going to be that rejection, that, you know, retracement after an impulsive move to the upside. And at this point, at the 40-50 point, it was just long overdue. Gold was trading at 85 on the RSI on the 4-hour time frame. Gold was even trading at 90. If I go to the weekly time frame, let's go back to the weekly. I mean, it has dropped today, but now it's trading at 80. At some point, it was even 90 on the weekly time frame, right? Now, when you trade with indicators like the RSI and the market is overbought, it doesn't mean that, oh, we're going to start dropping down. No, it just means that a retracement is due. And I want you guys to really get this. If you trade with the RSI as an indicator, right, don't trade it in isolation. Don't just trade it based off the RSI alone and assume that whenever the market is overbought, then it's going to start trending downwards. No, it just gives an indication that, okay, start to brace up for some kind of retracement. Now, instead of going against that trend, what you should do, and if you've been, you know, having drawdowns with RSI and you do this I'm about to tell you right now, your trading is going to change drastically. when you see a market trending upwards and you see that the RSI is high, I'm going to show you guys with the examples on the chart as well. And you see that the RSI is pretty high. What you should do is you identify the trend is bullish and you create that awareness that this overbought level only tells me that there's going to be some kind of temporary cool off in this market. It doesn't always mean the market is about to trend to the downside. It just prepares you to enter lower, which we've been doing. Enter lower. So what do? You identify where is the closest swing low after this high. You will be more comfortable to trade with the trend than against it. I'll tell you guys. You'll be more comfortable to trade with the trend than against the trend. So all you have to do is to identify where is the most recent swing low. So I'll give you guys an example of what I'm seeing on the chart right now. We're just going to do a little bit of back testing right now. So if you look here at this point, right, the market was about 80. Now, somebody that just got introduced to RSI would say, well, this is going to be a bearish move. The market is going to trend to the downside. You know, the bullish momentum is over, and they'll start to brace up for more bearish moves to the downside. But because you already have an indication that, hold up, the dollar is losing value, there's tension in the Middle East. When you go to the monthly, you see that the dollar has the gold has been, you know, trending upwards for a very long time. The month even started bullish. The previous month was way bullish. You have an overall idea of what's going on in the market. So whatever the RSI tells you, you already know that this is a bullish market. So I want to identify the most recent swing low that I can hop on this trade. Now, where is the most recent swing low? We have one, and I know a lot of you guys would also ask, oh, why didn't gold start to go up from here? I'm going to explain to you guys. We have one, and then we have two. I can also extend this and make it very visible for you guys so that you can understand why this is an important zone. So you expect that cool off from gold, not because the market is about to go on a downtrend, but because after, even as humans, when you run for like 400 meters, you would cool down a little bit and continue, right? After an impulsive move, there would most likely be a retracement. Now, if you identify this zone as your retracement zone or your most recent swing level, your area of interest, it doesn't mean that once the market gets here, you should start buying. What it means is every key level that you see on the chart, every key level that you identify, it's a level of awareness. You create that awareness that I want to see what the market does here. In this case, it's clearly obvious that the bearish move was way strong and the market closed bearish. Remember, guys, this is the 4-hour time frame. What you do with the higher time frames like the 4-hour time frame or the daily time frame is to identify momentum, and then you go to the lower time frames like the 15 minutes time frame to now trade after your confirmation. So if you're waiting to buy here with the understanding that, well, we're overbought, we're going to push back to the most recent swing low or the most recent area of interest, then I want to buy here. The market gets here, you don't see a bullish momentum, you still see the market continue to push all the way down, there would be no reason to buy. You want the candlestick to close first before you get your confirmations. And what did it do? It closed bearish and even continued to push to the downside. Now, when it closed bearish here, what do? You look out for the next key level. If gold had closed bearish here, what do? You look out for the next key level. Because markets would most likely hunt liquidity. That's why a lot of you guys have this experience where you place your stop losses, the market takes you out and then starts to go in your direction because your liquidity was hunted. So while this would have been a good place to hop on a buy just because it's a key level for us, we didn't get a confirmation here. We got a confirmation here, a rejection here. Now, to be honest with you guys, if I was trading this market, I wouldn't have entered here as well. I would most likely enter the trade around here. Why? Because I'm seeing rejection, rejection. I'm also seeing rejection here. I'm seeing another rejection that closed bullish. I would most likely enter the trade around this zone, which is exactly what we did here. And then you now have areas to the downside for your stop loss. If you're entering a buy trade here, what would be your level for stop loss? It's going to be very long down here or down here. That's going to be very, very spacious. We're talking about over 400 pips, which is too much. And now you're more comfortable to trade here because overall trend is bullish. If you understand the retracement, you've seen the market sweep here, you've seen the market reject here, and now you're more comfortable to go long even with the bullish momentum you're seeing over here. Let me know in the chat if you guys understood the analysis. So what's happening with gold now and what should you do? Because I asked you guys in the chat to, you can see gold is even, still trending, still pushing to the downside. What's going on with gold down? What should you do if you trade gold markets? Again, guys, cooling off from overbought levels all the way down. This is a key level to monitor and observe, rather, just because we might see bullish momentum from here, but we need to see that bullish momentum form first. This is a strong bearish candlestick that took out these lows and is now also trying to take out this level. What would be the most recent swing after this one? It's right here and right here. So while this is a good opportunity to identify buy momentum, we have to see the buy momentum form. We're not just going to go ahead and start hopping into the trade. We have to see the rejections. So if you trade gold, again, a good level to monitor, a good level to observe, but you have to see bullish momentum from here. You have to see the rejections. You have to see the bears being rejected, which, I expect gold to push even down a little more before we see any correction to the upside. Let me know in the chat if you guys understood the gold analysis. So even with what's going on right now on gold, you still have an opportunity to scalp some sales to the downside, because I still expect this market to drop down of this key level. So if you're a scalper, you can hunt for about 50 pips to 100 pips on gold. To the downside. Okay. Everybody understands the analysis. All right, guys, if you've got any questions for me, let me know in the chat. You can go ahead and ask me your questions. like I said, guys, scalpers can go ahead and capitalize on this move. I expect gold to drop even more to the downside. I'm definitely still going to take out these lines I'm just adding right now, so my chart doesn't look messy, but these are some levels that you can aim for, right? There are some levels that you can aim for, this and all these levels here. All right, guys, I told you guys I was going to talk to you about, you know, something really important, how to recover from, you know, blowing your trading accounts, all this drawdowns that you guys tend to experience in the market, especially as beginner traders. I just want to give you guys a guideline that can help you recover from that, so you don't assume that it's the end of the world. Every blown account can either break you or build you, and you get to decide. So let's be honest, when you know, blow an account or face these huge drawdowns, it's not just the money that is gone, it's also your confidence, it's your focus, and sometimes you also lose belief in yourself. You know, you get to feel frustrated, you start to overthink. But that's okay. It's okay to feel that. Every, you know, successful trader that you know right now has faced that moment. But what is going to separate the ones that quit from the ones that grow is how they respond next. How do you respond next to that? And the first thing I want you guys to do is to face it. Most traders will just run along, you know, open another account, and that's exactly how the cycle repeats. Sit with the drawdown. Ask yourself why it happened, not how much you lost. Ask yourself why it happened. What happened? What mistake did I make? Where did it go wrong? Was it revenge trading? Was it using high lot size? Was it using no stop loss, or you know, over leveraging? All that. The drawdowns that you face in these markets, they don't define you. What defines you is your reaction to them. Once you understand what broke the account, then you can start building the mindset to fix it. And I'll tell you guys this, you can't fix your trading if your mind is still bleeding. You have to constantly remind yourself that I'm not a bad trader, I just made bad decisions. And you can take a few days to, you know, analyze. You don't necessarily need to go straight back into trading. You can take a few days to figure out, you know, what went wrong and how to build that strong mind around how drawdowns are integral in trading. And you're doing that just because you don't want, you know, your emotions to cloud your logical mind. If your mind becomes calm, then you can start to, you know, rebuild your system, rebuild your approach, and you become more strategic about it. And when you get into the next phase, treat it like a fresh start. Don't restart again, and you know, you want to start revenge, you know, going for a revenge mission or revenge trading. If you have to go back to the drawing board, even a demo account to backtest, you can. And then you focus on just one or two setups that work best for you. And then when you get back in your live account, you return slowly. You start to track every trade. You know, why did I take this trade? What was the emotion behind it? What was the analysis behind it? What was the reason for this trade? Consistency is what's going to lead you to becoming an accurate or a consistently profitable trader. But if you keep chasing dopamine, and you know, you're just going to end up gambling your way through the markets. And when you continuously do that, when you stay consistent with your analysis and you're able to develop and build on that edge, you'd get back on your feet. And when you get back on your feet, you need to protect your progress. And that's where you create boundaries. A lot of times, we think recovery is recovering the money, but recovery means putting systems in place to protect you from you. Why did you make the mistakes in the first place? Why did you blow the account? It was your decisions. The market doesn't specifically know that you're trading $8,000. The market doesn't specifically know that you're trading $10,000. The market doesn't specifically know that you're about to use 10 lot size on a $100 account. You make those decisions. So set daily limits on your targets, on your risk, journal your emotions, be accountable. You can have a trader friend or a community like the Octa Nigeria Telegram community where you stay accountable for your trades and you still get to join other traders and discuss with them in a discussion chat and just keep yourself in check. Let me know if you guys understood everything I said. Remember, guys, if you want to watch this video again, you can always come back to the Octa Broker YouTube channel to rewatch it if you missed anything, just to have refined knowledge. I'm looking at the chart to see if you guys have any questions for me. If you have any questions, please let me know in the chat. You could go ahead and type your questions. If you haven't already, you can use the link in the description. There would also be a link in the live chat that you can use to download the Octa trading app. It offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. It also has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. Now, if you made it this far, congratulations. You get to receive or use this promo code to receive a 100% bonus on your deposit. The promo code is Ambrose E100. You can use that when you're making a deposit to get a 100% bonus on your deposit. Remember, there's a certain volume you need to trade to be able to withdraw your bonus to your trading account or your bank accounts. You'll see it right there when you're making your deposit, the exact volume that you need to trade. Questions, guys? Oh, someone's asking. Yes, I believe gold will still go down further. So those levels I mapped out for you guys. I think I removed the levels, but it's doing that, guys. It's already doing that. It's already doing that. From the time I told you guys to hop on the buy trade up until now, gold has already moved about, that was at 5.2. So we're talking about 70 pips rather. From the time I told you guys to hop on the sell trade up until now, gold has moved 70 pips. So that would have been simple profit for you guys if you took out at this previous low. But I still expect, more downside on gold. I still expect gold to break out of this trend line. Questions, guys? This is the 15 minutes time frame. Again, I told you guys, I look at the 4-hour and the daily for momentum and, intraday directions. And then I go to the lower time frames for execution. Okay, guys, I don't think we have any questions on the live session today. Guys, I wasn't able to turn on my camera just because we had issues with the lighting at the late time and close time to the session, so I didn't want to delay you guys and come late on the session. I just wanted to go ahead and have the session with you guys. So we're going to wrap up the session here right now, just because I'm not seeing any other questions in the chat to answer. Oh, okay. I just saw one right now on Bitcoin. All right, let's take a look at what's going on with Bitcoin. So Bitcoin usually rises when people want to, take risk, and Bitcoin falls when people are trying to get cautious, right? Now today, you can already see investors, traders, they're a bit nervous. They're not buying as much, crypto. And you also have to understand that the dollar strength also hurts Bitcoin as well. It also affects Bitcoin as well. A strong dollar would most likely push Bitcoin to the downside because people also prefer to hold real cash when markets are very uncertain. And if you look at the previous days, if you look at the past, if you go back in time, you see that Bitcoin went up, a lot, and some traders are now taking profit, just like with gold as well. You can see how we were trading at 73. The RSI was pretty high, and this was also, can also extend this to previous resistance, and how we didn't get a follow-up on bullish momentum here. You can see how the market is, reacting to the downside on Bitcoin. But this doesn't mean that it's now bearish. We're just reacting to the impulsive move, profit taking, and also the RSI being a bit high. So right now, Bitcoin is not trading at any key level. I could use this minor level in between, but it doesn't really do it for me. Could also spot this one as well. But if you want to trade in between these swings, right, these are some of the levels that you should pay attention to. I'm going to extend this so that you can know the swing I'm talking about. If you want to trade between this swing and this swing high and this swing low, this range right here, these are some levels you can look out for to hop on buy opportunities. This one right here and this one as well, and also this one. Anything below this one will most likely see Bitcoin trade lower. So let me know if you understood the analysis on Bitcoin. Let me know in the chat. All right, guys, we're going to wrap it up here. If there's one thing that I want you guys to take away from today's session, it's that drawdowns and blowing accounts doesn't make you a bad trader. It just kind of exposes where you need to grow. Okay, every drawdown gives you a lesson about patience, about risk, about emotional control. And the goal is not to avoid failure entirely and to not lose any single trade, but to make sure that every drawdown is controlled. And if you must fail early, you learn from it. Guys, we value your feedback. Take a moment to fill out our survey. It's going to take just 1 minute of your time. You can scan the QR code that you're seeing on your screen, or you can use the link in the description to fill out the survey, because this survey and your feedback is very important for us to improve our future webinars. All right. Thank you guys for joining today's session, and I'll see you guys in the next one. Bye.